Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. As we head towards earnings season, it's going to be important to think about what we're looking for when earnings reports are released. And one company that I want to look at is Airbnb. This has been a very disruptive company in the travel business, has really taken on hotels and been very successful in building a marketplace that not only can draw in customers, but also brings a lot of innovative supply into the market as well. So I want to look at the 4 things that I'm looking for when Airbnb reports earnings and what investors should be looking for. My name is Travis William. Thank you for watching Rive Investing. Please subscribe here on YouTube for all my content and turn those notifications on as well. The first question to ask is whether 2020's results were a blip or a new normal that Airbnb can build on. If you remember, going back to early in the pandemic, Airbnb really had to cut its costs, cut about 25% of its workforce, had to raise new money when demand effectively went to zero almost overnight. Now, the company came public and then really benefited from that lower cost structure, and in 2022 reported $1.9 billion in net income. But is that a sustainable number, or is that kind of margin going to come down over time? Let's look at a couple of numbers here. Here you can see the fourth quarter earnings results. Fiscal 2022 is on the right, 40% year-over-year growth to $8.4 billion in revenue. Even in the fourth quarter, 24% year-over-year growth. So obviously that growth number was coming down, but that is probably going to be pretty expected as the pandemic kind of slowed down and the comparisons were a little different later in the year. But this is the big number right here. $1.9 billion in net income, $2.2 billion if you exclude foreign currency charges, if you include foreign currency changes. So their net margin is about 25%. That's a really impressive number if they can keep that up. Go down here a little bit further, and free cash flow is going to be $3.4 billion. That, again, very impressive number. But is that going to be sustainable given the fact that there are a number of competitors in the market? Airbnb isn't going to succeed without other companies like Booking.com and other travel sites trying to take some of this market share. But right now, it appears that everything's going really well. So what I want to see is, are these numbers sustainable, and can the company grow revenue and net income, actually have a little bit of operating leverage on the bottom line? If they can, this is going to be an absolute home run stock. So that's something that I want to see continue going in the right direction. The second thing is looking at market share. 2022 was one of those years where everybody was growing, people were going back out, traveling again. And so it's easy to report higher revenue numbers when the entire industry is growing. It's like a rising tide lifts all boats kind of a thing. But what does market share look like, and what does competition look like in a more normal environment? We're maybe not quite there yet in the first quarter of 2023, but we are going to get there eventually. So as competition comes into the market, is Airbnb able to hold them off? Are they able to build on their niche and grow into other markets? Or what does that look like? Because there's obviously a lot of attention on a company like Airbnb. Depending on customers' experience, they may be looking at hotels for certain things and maybe looking at Airbnb for certain things. So is there a limit on that growth? Is the company able to continue taking market share, or have we hit kind of a peak with that? That's a big question that I have, and we'll be able to tease out some of those numbers at least when earnings are released in the first quarter. One of the interesting things about Airbnb's business is they're really a partner with their hosts. And a lot of hosts have been buying and building Airbnb specific homes. So are they able to do that in a financially viable way, especially with what has happened with interest rates over the last year or so? As interest rates have gone up, the cost of financing those kinds of buildings and even buying them in the first place has gotten more and more difficult for the hosts that Airbnb is working with. So on the supply side, what does that dynamic look like? What do they have to do to work with hosts? Are those hosts able to be profitable? Because at the end of the day, Airbnb only succeeds if its hosts succeed as well. They don't want to be taking all the value from the value chain. They want to be able to help them build businesses as well and be a really sustainable piece of the ecosystem. They had some really good moves early in the pandemic when they helped hosts out financially when a lot of their bookings were canceled. But I'm really interested to hear more commentary on what does that supply dynamic look like now that interest rates are rising? Are we seeing an increased supply in the market, or are people deciding to sell their homes because they can't afford to do Airbnbs anymore? That's going to be a critical piece of this business. If supply is shrinking, then revenue is going to shrink. If supply is growing, like it has over the last year or two, then revenue can grow as well. But maybe some of that growth was as a result of a zero interest rate environment. So we will see how that supply dynamic plays out. And the final thing is long-term growth for Airbnb. I want to read a quote from the recent earnings report. Airbnb in 2023 is looking to expand beyond the core. We have some big ideas for where to take Airbnb next. And this year, we will build the foundation for future products and services that will provide incremental growth for years to come. That's the kind of thing that I like to see from disruptive companies. But what exactly are those products? We're coming up on halfway through the year and we haven't seen a whole lot yet. So investors should be looking at where does that next phase of growth come from for Airbnb. I love the niche of this business. I think that's something that they can slowly grow over time. But there is going to be a cap on how many times people want to rent in a whole home or a room in somebody's place for a period of time. So how do they grow that business over time? That's something that management has alluded to, but they need to give a little bit more details on. So that's the fourth question that I have going into this earnings report. Maybe we don't get a full answer quite yet, but hopefully we start being able to piece that together. What questions do you have for Airbnb going into the first quarter earnings report? Love to hear your comments in the comment section below. Don't forget to subscribe to Rive Investing. Thanks for watching, everybody. I'll see you here next time.